Friends, welcome to this new topic of principles of lending and credit investigations and due diligence and booking of proposals. So, I have given a lot of topics, a lot of videos on FINACLE also, and I'll be sharing in between also. So, what I feel is I should give more emphasis to other topics of the banking also. So, like lending and other assets like retail assets, corporate loans, working capital, ratio analysis, and various topics of the banking. So I hope you all are very much aware that I have launched a website wherein I had launched a platinum module for FINACLE, which has all the utilities which are required for a beginner in any bank. I've been getting a lot of responses from a lot of people all over India where they're saying that its videos are very useful. So I would advise all of you going for a platinum module of FINACLE, and I'll be uploading a lot of topics: risk management, credit analysis, ratio analysis, balance sheet analysis, working capital, microfinancing, SMSME loans, and a lot of topics which I feel a banker should be aware of it, right? So kindly log in, and I'm really thankful to all the guys, those who have liked my YouTube channel and subscribed to my YouTube channel. Do join my website, that is, I think it's given on your screen also, BankTekSkills.com. So just log in with any email ID and choose any password that you like, and you have to pay a very nominal fee for that. And the videos are real time. I think you learn a lot. So it gives you a basics how the FINACLE is working, and most of the banks are working in FINACLE, and a lot of mergers are going to take place in future also. So a lot of banks would be using the same system FINACLE, right? So it has videos. The platinum module has videos on KIF creations and lot of account opening, CASA, and current account, savings account, right? So wherein you can have a lot of transactions, how the transactions are to be done, that is also taken care. So loans modules and inventory management, and a lot of topics have been added in one module. Earlier what was happening, there was an advanced module and there was a beginner module. So this is comprises of all the videos, and it is more comprehensive, very nicely explained with the uh, topics, that the fields which are appearing in the FINACLE system, right? And thank you so much for all of you. Do share with your friends and colleagues so that they can also take advantage of it. The knowledge is always, when you share knowledge, it increases manifold. So do subscribe to my YouTube channels, and do log into my website, and I'll be adding a lot of topics. So I think this site would be having a lot of topics on various banking, FINACLE, and a lot of retail assets, composite loans, working capital, business loans, right? And consortium advances, fund based, non fund based, right? Risk management, how risk is managed in the bank. So kindly, and thank you so much for all of you, those who have already subscribed. And I wish you all the best so you can learn. This is my endeavor. I've been a banker for 28 years, and I've been into training field. So I'm sharing whatever knowledge I have gained in my life with all of you so that you can all be a success. So in this topic, I'll be discussing principles of lending, credit investigations, due diligence, and booking of proposals, right? So principles of lending is very important. So in credit, prevention is better than cure, right? So always, instead of having a disease then going for the treatment, that is more risky than preventing that disease to happen to yourself. So we have to take precautions, right? So prevention is better than cure is the hallmark of all the lending principles, right? So principles of lending, what to look at: safety, risk management; liquidity, asset liability management; purpose, enterprising, for what business this entity has been formed, for what purposes this entity wants a loan from us; productivity, how is it contributing to GDP of our country, what is the production level, what is the future production level aimed for; security, cushions for fallback upon, so we take collateral security, guarantees, and depending on the type of customers, right? Then technical feasibility, whether that business is technically viable or not, whether it will be able to survive the competition or not, financial viability, profitability, whether it will be able to generate profit or not, there is a sufficient demand in the market, that also can be seen before we get a proposal for lending. So these are the principles of lending. And national interests, of course, social obligations, maybe priority sector, mostly got to do with the priority sector. Is the business in a part of priority sector because RBI and government wants more focus on credit to the priority sector. And I think you all know that 40% of total advances should be to the priority sector. And when we give a loan to group means there are many entities having the same similar management. So that is a group credit policy of the bank. Safety, first is safety, right? So safety should never be sacrificed for higher profits. Always remember this. Exposure norms, do not keep all eggs in the same basket. So how much is the exposure? It should be within the limits. When advance should be expected to come back in normal course without resorting to legal recourses. Concept of margin. We never finance 100%. We always ask the borrower to contribute from his own resources also. That is called margin. And why we do that? Taking care of accrued interest. Suppose, let's say customer is not depositing the amount in the account, and but interest is being charged. To cover that, we have this margin. Fluctuations in the market value of the security. So whatever collateral value we have taken, there may be a fluctuation in the security. So we take mostly just the double of the loan amount, we take the collateral value. Any property to be mortgaged. Stake of the borrower, his own contribution. That is concept of margin. What is he going to contribute in the capital or in the working capital or in the cost of machinery. So it is never the 100% financing done by the bank. Liquidity. Matching of the maturity of loans to the maturity of deposits to avoid any mismatches in the portfolio, right? Purpose. If the end use is insured, end use means for which purpose this entity was formed, whether that goods are being produced or not, the unit will be developed and profits can be generated in the business. Diversion of funds, misuse of loan amount for purpose of other than for which it is taken, lands the unit in trouble. Risk management. Risks are inherent in banking business. It's a part of credit risk is there when EMI is not being deposited by the customer, or sufficient credits are not being afforded in the non-EMI loans like cash credit, working capital. What is a risk? Risk is probability of occurrence of a loss. It may happen, it may not happen, right? It may be a contingent. The loss may be on account of lower or negative income, right? So we have to ensure that there's sufficient net profit. Depletion in the value of the assets also causes the risk in the banking business. So when we are giving a loan, we are always taking a risk. Types of risks. In a deregulated economy, banks are confronted with various types of risks. Credit risk is there, market risk, interest rate risk, liquidity risk, and operational risk. So market risk means interest rate in the market. So funds are available in the market. Also credit risk when EMI is not deposited in time, or credits are not afforded in the account in non-EMI loans also. Liquidity, short of cash crunching. Cash outflow is more than the cash inflow. And operational risk. Any operational risk, machinery got stuck or something happened with the operations part in the machinery or in the business. Impact of risk. Since expected losses can be estimated for any business activity, they can be factored in pricing of the product and provisioning for the expected loss. So we make provisioning for any unexpected loss also every year, every quarter. For unexpected losses, the organization needs to have adequate capital to absorb such losses. Credit risk is the third party default risk, right? arising out of money lent to a third party which may not come back, EMI, or non-EMIs, credits are not there in the account or interests are not being serviced in the non-EMI loans also. The default may be on account of inability or unwillingness. So this is called willful defaulter. When a customer knowingly defaults in paying EMIs or making credits in the account, he is called willful defaulter. Credit risk can be standalone risk or risk of a portfolio. The standalone means one account, portfolio means many accounts, non-fund based, fund based, machinery, term loan, working capital, and so on. Portfolio comprises of that. Credit risk. Party's intention ability to pay back the money borrowed should be within the criteria. If borrower's intention's ability is good, no documents is required. If borrower's intention is bad, no documentation can help us either. So no shortcut to be proper assessment of the credit proposal. There is no shortcut. We have to do comprehensive assessment of any credit proposal. Assessment of credit proposals, 5 C's formula. Character, willingness of the party to pay. Capacity, ability to party to pay the loan, EMI, whether he has sufficient income, net profit to pay our EMIs or credits sale proceeds in the working capital account. Capital, does he have the capital or margin to reserves to financial reserves of the party? This is called margin, capital. Collateral, we always take a collateral. We mortgage the assets, houses, shops, commercial, residential properties. We mortgage them to cover the loans in case party defaults in making the payment of the loan also. Conditions, terms and conditions of the proposals. Is the borrower able to comply with all those terms and conditions? Assessment of credit proposals based on 5 P's: person, who are the directors, who are the proprietors, who are the partners in that business entity, purpose for which the loan has been taken, for period, for how much time do they want to repay or for how much time do they want the working capital, profitability, whether they will be able to generate sufficient net profit or not, and prospects of the business in future. Is there any risk? Is there any low demand being getting lower in future? That has to be seen. So these are the 5 P's of the formula. Market risk faced by the banks which depends on market variables. These are interest rate risks. So sometimes funds are also available in the market at maybe at a higher risk, higher rate of interest or lower rate of interest, or interest rate may fluctuate. Exchange risk, foreign exchange risk, in case who is doing export and import. Commodity price risk, so there may be a competitor who is selling at a lower price, so we will have a commodity price risk. Liquidity risk, liquidity refers to the ability of a bank to honor its short-term commitments, right? So those are called short-term liabilities. Banks may not be able to honor its payments, commitments, or may do so at an exorbitant cost also. This may arise due to the mismatch in the assets and liabilities profile of the bank, right? So that is again current assets minus current liabilities. Liquidity shortfall in one bank may affect the entire system also. Operational risk, risk of loss resulting from inadequate or failed internal processes, people and systems, and from external events. We didn't obtain adequate documents, we didn't create a charge, with the registrar of companies in case of loans to the given to the companies, hypothecation of floating assets, clause not noted, lien not marked and fixed deposits, or any other security that we have taken. And he was already existing defaulter in other banks, etc. We didn't see the CIBIL report properly. These are all causes operational risk. Can we avoid risk? Risk cannot be avoided. It needs to be controlled and managed within the limits prescribed. So there are 3 stages to risk management processes. Risk, first we have to identify the risk, then we have to measure the risk, how is it low, medium and high, and then we have to control the risk accordingly. First identify, then we have to measure the risk and then control the risk. To due diligence is always done whenever we receive a credit proposal. It means discovering all risks and implications before decision is made. It is a continuous process and is applicable at various stages of credit management. And nowadays, robot advisors are also assisting credit managers in taking decisions regarding any credit proposal also. Pre-sanction phase, credit investigation. Application sanction phase, documentation. Then disbursement after documentation. We disburse the loan as per the type of loan. And post dispersal, whether end use has been verified or not, proper documentation has been done, and all those documents are vetted also by the legal team and the technical team also. So these are some of the new credit proposals to ensure banks in dealing with persons of sound repute and creditworthiness. So we have to be away from the people involved in crime, fraud, unethical practices. So these are some of the annexures. Person of standing in the market, persons from similar line of business, we can have references from them and we can reject the proposals if the report is adverse. That is due diligence report. What is the significance of due diligence exercise? Process of obtaining information, ensuring validation of the same, credit investigation, compilation of credit report are important tools, prerequisite for pre-sanction appraisal, and scope for cross-selling also, offering other products to the customer. What is due diligence exercise? Process of ascertaining integrity and creditworthiness of the applicant. Key element in the retaining of the credit proposals, banking relationship only after knowing the customer's true identity. Screen and dissociate from persons of dubious distinction carrying on fraudulent activities also. Why due diligence is needed? To confirm the KYC norms, know your customer, know more about the applicant and the client, economic activities both existing as well as prospective, to ensure proper appraisal of the credit proposal, to ensure quality asset portfolio. The quality should be good. What it reveals, it unfolds valuable information on the integrity, honesty, reliability, creditworthiness, financial status, capacity, character and competence and experience of the borrower and the client. Due diligence. What it discloses, it allows, unfolds vital information held back by the borrower. It throws light on the credibility of the applicant, reveals borrower's ability to honor commitments. It shows his willingness, ability to repay the loan also. So two steps of due diligence is non-financial means and financial means also. Unit visit, personal interview, telephonic discussion, PD, personal discussion also. Market survey, opinion of suppliers and goods, information available in the media, credit rating, market conditions, price trends of the products. Inquiry with the banks, confidential opinions from the bankers, nature of facilities enjoyed, banking relationship, conduct of the account, status of the account, whether it's standard, non-standard, NPA, verification of the statement of account, no objection, no due certificate from the existing bankers also. Financial means collection, analysis, interpretation of financial reports, balance sheets, profit and loss accounts, financial statements, net worth statements, tax returns, assessment, ratio analysis, quick ratio, debt service coverage ratio, current ratio, all those ratios are important. Loan application form with relevant details. In case of existing limits, furnish details, date, amount of sanction, disbursement, present outstanding balance of the overdues, conduct of the account, and inspection irregularities if any. So defaulters list of the RBI is a variable tool before we sanction any loan of higher amount. Contains names of defaulters with liability of 1 crore and above, suit filed, non-suit filed. So we have to check that also from the RBI's website. and it is available at the various controlling offices. Verify list of willful defaulters of 25 lakhs and above. And ECGC, Export Credit Guarantee Corporation. ECGC is Export Credit Guarantee Corporation caution list if he is an exporter or importer, and CIBIL report also. The group lending policy conforms to our group lending policy, not a negative list selective approach. So we are financing a group consisting of different entities having this similar management, well within the exposure norms, ensure entry level prudential industry exposure, seek in principle clearance if not conforming to group lending policies. So these are some of the ratios, benchmark ratios. Current ratio should be 1.252 is to 1, current assets upon current liabilities. And TOL and total net worth, total outside liabilities upon total net worth is 4 is to 1. For term loan, promoters' contribution should be at least 25%, that is a margin. Debt equity ratio 2 is to 1, and debt service coverage ratio should be 1.5 is to 1. These are the benchmark ratios. So there may be a variation. We have to compare with the peer industries or peer businessmen. You have to see that. Checklist for booking proposals, credit investigation done, due diligence done, whether proposals conform to group lending policy, yes. Whether bankable proposals, yes. Whether pre-sanction visit is made, very necessary to visit the premises, yes. Whether all required information submitted, yes. Extent of collateral offered, adequate, it should be double the amount of the loan. And concessions sought, discussed and agreed, right? Collection of information, loan application form, prescribed format, financial statements, annual reports, sales tax. Now we have this goods services tax, IT assessment, credit management analysis format, CMA. There are various forms under CMA format also. Net worth statements, property owners shall be guarantors to the loan. Due diligence, confidential reports, CR also we combine. Full details of collateral security offered, legal opinion, valuation report. We have advocates on board and technical, you can say architects on board to find out the market value of the property being mortgaged. Disposal of proposal within the time schedule. If it is a priority sector, fair practices code for lenders. So details of associates, group concerns, security guarantee standards, evaluation of the security shall take into account the market value of the assets in the event of enforcement of security. That is under SURFACE. Asset acquired out of bank's finance shall be taken as primary security. The loan that we give for any particular product, that is a primary security. We can take any property, be it residential, commercial, as a secondary security. So land and building taken as security should be revalued once 3 years. So we technical team does revaluation every time. And if collateral security stands in the name of the third party, obtain their guarantee. So this is very important. When we are obtaining a guarantee, any property mortgage in third person's name, we have to obtain their guarantee also. So booking a proposal, processing a loan papers, assess the genuine credit requirements, appraisal notes, submit full details of the project, purpose, scheme, project cost, margin, source of margin, capital contribution, technical aspects and economical aspects also. So submission of the proposal to the appropriate authority for sanction and review, delegation to the deciding factor, gradation chart for advances above rupees 1 crore, proposal falling within the powers of FHU and all that, branch manager's recommendation has to be there. So this is all about credit assessment, ratio analysis. I hope you learned quite a lot, and I'll be sharing a lot of videos and I'll be adding these into my website also in a detailed manner. So kindly do subscribe, and again once again I'm repeating, buy the platinum module of the FINACLE, which has you can say live videos on all the topics which are covered in a branch, right? And in future I'll be adding foreign exchange and trade module also in future, right? So I hope you are enjoying it, and in case अगर आप में से कोई चाहता है कि मैं हिंदी में भी बनाऊं, तो डू गिव मी अ कमेंट ऑन माय यूट्यूब चैनल सर कि हम हिंदी में चाहते हैं आपका ये सब कंटेंट, तो आप हिंदी में भी आई ट्राई एंड मेक इन हिंदी ऑल्सो, so that all of you pan India can benefit out of it, right? So kindly put a request. You want them in Hindi? I'll try and upload them in Hindi also. So once again, thank you, and do subscribe to my YouTube channels. Press a bell icon so that you get notification every time I upload a video, so you can benefit from it. And this is good for all those who are already new joinees in the bank, or who are going to join in future also, preparing for banking exams. These videos, these topics on my YouTube or on my website are very useful, very suitable for all of us. And I'm saying it because I have an experience. So thank you so much. Wish you a happy knowledge journey. Thank you.